Good afternoon. Temperatures are rising every day, and not only in terms of the weather. The geopolitical scenario continues to be suspenseful, and markets remain on the edge. Hello, I'm Anuj Choudhary. Welcome to this week's commodity forecast, wherein we will analyze and try to decipher all the chaos happening in commodity markets. If you too regularly track geopolitical developments and their impact on commodities, then don't miss this video at any cost. In today's episode, crude oil and aluminium will again be in the spotlight. So stay tuned till the end for crucial support and resistance figures for both these commodities. Let's start with macroeconomic headlines. Geopolitical risks escalated on June 8th as Iran and Israel engaged in military actions in response to Israel's military action in Lebanon, further straining the fragile regional truce. Reports suggest Donald Trump urged Israel to avoid retaliatory escalation in Beirut while pressing Iran to resume negotiations, although Israel subsequently responded with ballistic strikes targeting central Tehran. Despite continued back-channel communication through mediators, progress on key sticking points, including the Strait of Hormuz, frozen Iranian assets, and the Lebanon conflict, remains limited, keeping regional uncertainty elevated. Global markets turned sharply risk-averse on Friday, the June 5th, after a strong US labor market report reinforced expectations that the US Federal Reserve may keep rates higher for longer. The Nasdaq 100 plunged 4.8%, marking its sharpest daily decline since the April 2025 Liberation Day tariff shock, while the broader tech-led sell-off erased nearly $1.8 trillion in S&P 500 market capitalization. US May non-farm payrolls rose 172,000, well above market expectations of 88,000, while April payrolls were revised sharply higher to 179,000. Combined revisions added 93,000 jobs over the prior 2 months, lifting the 3-month average to 188,000 and reinforcing resilience in the US economy. Hiring strength was concentrated in leisure and hospitality and local government sectors, partly linked to infrastructure and World Cup related activity. Wage growth moderated slightly, with average hourly earnings rising 3.4% year on year, while the unemployment rate held steady at 4.3%. Global central banks are expected to take advantage of gold's price corrections as prices have corrected 25% from all-time highs, and the Chinese central bank added gold for the 19th straight month, keeping the larger trend intact. Global central banks added 243 tons of gold in first quarter of 2027. Looking ahead to the week of June 8th, markets face a dense event calendar that will test the repriced rate outlook. Key data releases include US CPI and PPI. Data releases in Asia this week include China's trade CPI and PPI on June 10th, as well as new loans for June 9th and 15th for May, which will further signal the extent of inflation pass-through and credit demand slowdown as the war in Middle East approaches its 100-day mark while negotiations remain deadlocked. The ECB is scheduled to meet on June 11th, where a near consensus of economists, including US, expect a 25 basis point rate hike. Commodity focus. Crude oil. Crude oil prices rose last week after 2 weeks of decline. It opened the week at 8,565 and touched a low of 8,494 at the beginning of the week. It touched a high of 9,290 during the first half of the week, but witnessed profit booking towards the end of the week. It closed 2.84% higher week on week at 8,614. We expect crude oil to trade with a positive bias in the medium term. It has taken strong support at the 20 and the 50-day moving average and is bouncing from the same. The momentum indicator RSI is rising along with a positive crossover, indicating further strength. It may find initial resistance at 9,550 and strong resistance at 10,080. Support is seen at 8,770 and strong support below the previous week's low of 8,570. A breach below the same may lead to a trend reversal. The price indicator is bullish. Commodity focus. Aluminium. Aluminium rose in the first half of last week and touched a fresh all-time high of 397.10. It opened last week at 386.60 and touched a high of 397.10 in the first half of the week. However, prices witnessed profit booking at higher levels and touched a low of 383.15 towards the end of the week. Prices closed the week 0.4% lower week on week at 384.40 versus 385.95 in the prior week. We expect aluminium to trade with a positive bias in the medium term. It may find resistance at the previous all-time high at 397.10 and strong resistance at the 161.8% Fibonacci extension at 405.45. Support is seen at 377 and strong support at 371. A sustained close below the same may lead to a trend reversal. The price indicator is bullish. Weekly price action. Gold fell by 4.6% week on week. Silver fell by 9.91% week on week. The gold-silver ratio rose by 5.83%. Base metals continued to remain flat this week. Weekly event calendar. This week, markets will track ADP Employment Change, existing home sales month on month, initial jobless claims. That's your weekly commodity forecast from Mirae Asset Sharekhan. For now, no solution to the ongoing crisis seems in sight, but we would still welcome your views on what's happening in the markets in the comment section. To help you keep track of crucial market developments, all our research offerings are now available in one portal, the Mirae Asset Sharekhan Research Center. Explore research calls and detailed research reports across equity, mutual funds, F&O, commodities, ETFs, and more. To access our videos and research reports in real time, join our WhatsApp channel today. The link is in the description. Thank you for watching.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.